Hi, Scott Kibbers here with Market Insights for June of 2025. Let's get cracking. We're going to have some insights from a couple of authors. We're going to look at local, state, national news, as well as some insights from NAR, Maricopa County, and individual cities. Here we go. From the author Chip Heath, he's the author of a book called Switch. Often, what looks like resistance is often lack of clarity. This whole report today is designed to give clarity on our marketplace and industry. It is slightly longer. Hang in there. I'll go as fast as I can for you. We're going to review some of John Burns' insights. I'm a fan of his right now, looking at government, economic cycles, technology, and societal shifts. We know there's a lot of uncertainty in the marketplace, but I wanted to give you a cast into the future and look at some incredible societal shifts that are coming our way to our nation. Back in the 70s, if we look at 70s rock, when we look at societal shifts, there are 5 key songs that they highlighted this month. Come Together Right Now by the Beatles, Tribes and thinking of Margaritaville with Jimmy Buffett, I Want It All by Queen, Take It Easy by the Eagles, May You Stay Young Forever, Bob Dylan. Please know that having a sense of purpose in life has become very, very important to all generations. Let's say it another way. This is what's happening in our societal shifts. People will move for tribes. People will move for family. They'll move for their grandkids. They'll move for good friends. They'll move to take care of their ailing parents, not just a home. That's number one. Tribal living in action. By the year 2023, 30% of our population will be 55 years or older. That population base control is about 113 million people. They control about 73% of the US wealth, which is ironically $113 trillion. And 22% of that $113 trillion is in real estate. What things they're looking for is luxury, low maintenance, affordability, simple and inspirational. They want to have a focus on wellness, and they want healthy living in motion, the activities, the movement, the pickleball, access to healthcare. All those things are very important to people 55 and older as they continue to grow. Let's take some quick insights about our market and industry in play. There was an awesome 60 slide presentation by John Burns' company. I have just a handful of them. This report took place just this week, and it's really saying a few things I wanted to share with you to give clarity. 49% of the 900 people in attendance are less optimistic about the housing market this year than last year. Some of the key takeaways from the summit are that there was a weak spring, that land is getting more crowded, that big builders are getting bigger, building products and industry navigation due to the tariffs, that uncertainty about the tariffs and all those things are shifting product strategies. Ladies and gentlemen, we all know about the uncertainty of the tariffs. I don't need to say any more about that. Let's move on. Couple green arrows I want you to follow. This is in the new home market. New home market is in the green arrow pointing to Phoenix, is still in the normal range. Now, for the longest time, new home builders have had great success the last 18 to 24 months because a lot of times the builders have their own lending institution. And if you use their lender, they could offer incentives and help you buy down the rate. What they're saying from this report is that's still the case, with one exception. Not only are they now offering an incentive to buy down interest rates, they're also having to lower interest or home prices for the first time, which is unusual. When we look at an overall picture of new home building, the big takeaway is that it was a disappointment for the first time in years. As we look at new home prices, we're part of the red arrow coming down in the Southwest. Texas, Florida are seeing a year over year net falling price, but in the Southwest, we fall into that. And that's also now due to buying down the rate and or for the first time, they're having to lower prices. When we look at home builders edge, and we a lot of times divide our population into first time move up buyers and empty nesters, adult living. Overall, they've slowed compared to what they've expected in the past. And that's just due to a lot of uncertainty in our marketplace, our government, and our economy. Now, in the resale side, we've fallen into the green arrow pointing to Phoenix. We've fallen into slightly a slower market, and we're going to go a little bit deeper into that. But this is coming from a national survey identifying Metro Phoenix. Now, home values are falling bigger in Texas and Florida than other markets, but the green arrow pointing of Phoenix, we're part of that slight decline. And when I say slight, I mean right now we're at 0.4 of 1% decline from where we've been in the past. When we look at percent nationally, 68% of the populations are delaying their plans to move due to economic uncertainty. Can't make that a bigger exclamation point. Now, last data point from this report from John Burns, which I find fascinating, is this. Currently, from a rental standpoint versus an ownership standpoint, due to interest prices and costs of housing, it is currently twice as expensive to own a home as it is to rent a home. And it's been a long time since we've been in that type of market. Let's shift our focus to NAR and the national aspect of things. Nakia Wright has been our interim and permanent CEO of NAR for the last 18 months. One of the quotes that I appreciate about her recent presentation, they want to de-risk the marketplace. And that's coming from NAR and taking the risk out of the marketplace for agents, brokers, consumers. And I also like this quote that came from the floor with Sherry Chris. She's a consultant for Nakia. We are changing at the speed of trust. In the real estate worker market, for all the agents and brokers out there listening to this message, there has been a lot of change in the burden of the lawsuits, etc. And NAR is going to continue to evolve, but they can only do that as fast as they continue to gain trust. Their focus are four key pillars: advocacy, data research, which we're heavy on, ladies and gentlemen. That's why we do this report. They're going to be adding a lot of new education programs and new technology. NAR, and as a whole, in that spirit of changing at speed of trust, want to run NAR like a publicly traded company. They are stronger together, leading the way, and they want to lift through education to the agents, the brokers, and ultimately to the consumer. Key growth factors in any local economy, especially in Metro Phoenix, is manufacturing, technology, bioscience, healthcare, transportation, trade, financial services, education, tourism, real estate, construction, and aerospace. Ladies and gentlemen, Metro Phoenix, Maricopa County, the state of Arizona, is doing very, very well in this set of demographics. And when you pull through, we are looking at a short-term slight dip in our market, but our indicators long term are very, very favorable. Let's have clarity around that. Now, this particular graph, again, it's a John Burns graph from the middle of the month. In the top left, there's a red arrow on Chicago, and it's only red to highlight Chicago. Chicago during the pandemic was one of the hardest hit cities in terms of people exiting that community and home prices. And right now, they're enjoying the biggest rebound of any city in the market. At the same time, the bottom right two arrows, for the longest time through the pandemic, two of the top five cities that grew in terms of appreciation, one was Austin, Texas, and two was Phoenix, Arizona, Maricopa County. And both of those right now, compared to the rest of the country, are a little bit in the red, with Austin being the lowest producing company, hardest hit in terms of price. When we look to decode this market and give you some clarity, I love this quote with the green arrow. Markets in the Sunbelt have strong advantages for future growth despite the short-term supply challenges. They continue to attract more people and create more jobs than any other part of the country. Burn that to long-term memory, ladies and gentlemen. Great quick segment on Kate Gallego, previous mayor of Phoenix. Not only from Harvard and Wharton Business School, but in 2017, when our metro was first talking to the folks in Taiwan about the chip manufacturing plant, she and another lady traveled there and went and talked to a startup airline called Starlux. And this is a picture of them. And that is now providing nonstop flights into Asia. And from an economic aspect of things, ladies and gentlemen, the Metro Phoenix Airport, Sky Harbor, is expected to advance an additional $3 billion of revenue in years to come. We are fortunate to have great strategy there, and we are going to continue to grow in our international hub throughout the world. Also, from a fine dining standpoint, several new restaurants are coming in. One of the newest restaurants, Mac McMillan, said Arizona is the best, becoming a mecca for new restaurants. And fine dining and that experience has been on the rise. As we look, and I'm getting ready to close up here, ladies and gentlemen, the statistics specifically for June, active listings down from 20,019, 628, under contract 6473, sold 5506. This is for Maricopa County only. This particular slide stayed in here, ladies and gentlemen, if you're getting ready to list and sell, if there happen to be 10 homes in your area, we certainly want to be in that top 30%, top 20% in terms of fit, finish, and price to be competitive. We don't want to get caught in no man's land, and those that are the most expensive, thinking that somebody's going to reach their home. It's just not happening in this marketplace, when in fact we're moving into a slight downturn in pricing. You'll see that here in just a second. Some zip codes here that are interesting. We currently have 131 homes per zip code right now. When we look at all of Maricopa and Pinal County combined together, the yellow graph, the mean sale price is down 1.9% overall in all of Maricopa and Pinal County. When we divide those two things up, we are seeing 1.9 in Maricopa, while Pinal County is up 0.6 of 1%. It's a little bit on the growth mode. When we look at active listings, we've leveled off 19,000, 20,000 doors. Under contract is peaked a couple months ago and currently at 6,000 and some change. When we look at closed listings, we peaked last month and we're dipping down. We're normally seeing that cycle in terms of seasonality. And finally here, new listings coming to market. It too is down from north of 10,000 into the 9,000 rate. Ladies and gentlemen, we had a longer update today. We hope this provided some clarity to you for our housing market in Maricopa County. Please know Eliza and I are happy to help you any way we can. If you want to discuss any of this in further detail, I'm happy to do so. A lot of good things are happening. Please get out there and make it a purposeful impact on our day.